Good morning, Paul Georgie from Allendale. It's July 26, 2010. Well, this morning we got commodity markets pretty much down here across the board. The outside market's not having too much influence on us. Dollar down 15, crude oil currently down about 72. The stock market down about 21 after the big rally late on Friday. Biggest factor we've got, weather. Has been excellent for crop development in most areas. There has been some torrential rains here across the upper Midwest that have caused damage to a lot of crops. Crops still underwater here this morning. But in general, the damaged areas probably will be offset by the benefits that we've seen in other areas that didn't get the heavy rains, like northeastern Indiana, Ohio. Delta area is looking for some moisture here in the next few days on the remnants from the tropical storm Bonnie. So it looks like the U.S. crop has gotten better rather than hurt. The other areas, China has got some rain. The areas in Europe, Europe had rain over the weekend, but when you get into the Commonwealth of Independent States, into Russia area, that is still dry, still hot. Damage continues there. We're getting reports of some wheat harvest in Belarus here over the weekend, where their yields are down from 3.1 tons to from 3.1 tons this year versus 3.7 tons a year ago. So sizable losses there. Harvest is going at a very fast pace because of the dryness and the early maturity of the crop. Other news that we've got to deal with here this morning is, what are the funds going to do? Are they going to be back in here buying? We've had overnight, we opened, went down sharply, made our lows early, kind of the same pattern as we did last week, and then seen a little rebound. But technically, corn market closed right on or below the 100-day moving average. I think that's critical to our trading attitude here today. It tells us that we probably need to be on the sideline for a little bit here, looking for opportunities. Markets were down into the support area. We've got support in the December corn, 378.5, resistance 393.5. Soybeans have got they were down 8 cents here overnight. We've got support at 962 3/4 with resistance at 992 3/4. In the wheat, 583 3/4, and then again at 572 3/4 in the September contract. Resistance at 610. That's the January high of 2010. Critical resistance area. If we can go up and take that out here today or in the very near future, would be a very positive signal for the wheat, and I'm sure would take the rest of the grains with it. In the livestock, we did have some big reports out on Friday. The cattle inventory report that gives us a trend for what we can expect in the market over the next 6 months, or a long-term picture. Not really a surprise there, pretty much in line with what trade was expecting. Don't expect too much out of that. The cattle on feed report was also out on Friday at 2 o'clock, more of a near-term picture and how our cattle supplies are stacking up here. We didn't place as many cattle as expected. We didn't mark as many, and we don't have as many on feed as what was overall expected. So that turns out to be a little bit friendly to the cattle. We're giving the market a little higher call here this morning because of that report. Cutout values were down 62 on Friday in the choice, select down 30. The cash cattle trade this week, we would think would be a steady, at best, kind of market. It looks like we could back things off a little bit here, a little profit taking possibly. In the pork trade, cutout values were down 25 cents there. Had a strong close on Friday. Can we maintain that close? Can we get some follow through here today? Technically, we should. We've got support at 82.25, resistance at 83.37. If we can take these highs out and make new highs again today, I think it would add a lot of confidence to the traders and also get the funds back in here supporting that market. If you got any questions, don't hesitate to give us a call here at Allendale, 800-262-7538. We wish you a very successful trading day, and we'll talk to you tomorrow morning. Thank you.